This is week 7, and so I'll quickly go over the module. Week 7, there are 2 learnings. One is a continuation of Gen Inc., and this is part G. So let's connect what we have learned so far. Through part D, if you recall, we learned about ROIC and weighted average cost of capital. And the ROIC is the hurdle rate we need. So if we are making investment in a company, do we want to make sure that we continue to enhance the value? And so any project we invest, we want the hurdle rate, also called the discount rate, to be equal to or above the ROIC. Then in part E, you learned about some opportunities that Gen Inc. looked at it in terms of investing in a software or also in the labor enhancements through capital investment and so on. In part F, you learned about how do you value a company, how you look to see what is the value of the company using the discounted cash flow. And the process is to look at the forecast or the pro forma for the first few years. Typically, when you're looking at the value of the company, there is a bottoms-up forecast, at least for a few years, and typically it's for 5 years. And then beyond that, you assume a growth rate for the cash growth rate, and then you learn how to figure out the terminal value of the cash flow beyond the year 5, and then also the NPV value of the cash flow between year 0 and 5. Then you learn how to figure out how to do the calculation. And once you knew the value of the company, you also learned what is economic value. What is economic value? Economic value is what is the value of the company based on learning how to do the valuation through cash flow. Again, looking at the terminal value for the year 5 onwards and looking at the NPV. So you got the economic value or the value of the company. This is the enterprise value. The enterprise value really is to take what is economic value, which means what I can sell it for, but you have to subtract from it any debt that would be in the business. So economic value is, again, coming up with the value of the company, subtracting the debts. You learned that. This week, you will do the last piece of the Gen Inc. That has to do with if you're looking at acquiring a company, how do you think about it? So in the case study, I've given you a lot of notes. Some of them are based on my experience being involved in acquisition. And the whole idea really is to say that if I have a company A and I want to buy a company B, when I start to integrate it, what are some of the synergies? And how do you kind of think through it? In the case study, I've given you some examples. In the case study, I've given you what are some of the parameters you will look at it. So here you will be looking to see, how do I figure out what is going to be the benefit for acquiring a company? So you are going to learn to do that as part of the Gen Inc. part G. The other new topic that you're going to learn is basically connectivity between some of the learnings that you did earlier in this session. On week 2, we talked about ratios, and you also learned some of it in your accounting MBA 633. So the discussion thread is basically having you to start talking about this ratios. And here, there are a bunch of videos that I have for you on ratios. I would like you to watch it and discuss how financial ratios can be used to value the financial health of the company. The ratios are very, very important when it comes to financial analysis, and I think this is which chapter you're going to learn to do that. Do some research, for your discussion thread. Look at the ratios of some companies and look at the same industry so you can make an apple to apple comparison. For example, say you're looking at the auto industry, look at Ford and GM. If you're looking at, let's say, a retail industry, look at Nordstrom and Walmart, or Walmart and Target. Then kind of look at the ratios and kind of have a rich conversation in doing so. That's part of the discussion thread. I've given you some PDF material in here. This will give you some more in evaluating the financial performance. I think it's very, very helpful. You should read it, not only for this session, but overall it's helpful for you as you go forward. There is a video on financial ratios. Like I said, there are a bunch of videos I've given you. This will help you to get your mind around the ratios. So please watch it. All of them. They're going to be very, very helpful in terms of doing it. And then I've given the PowerPoints. So the ratios that I have used in there. Also a just additional PDF on some of the ratios. So this could be very handy for you, both in this class and as you go forward into the future classes, especially 640 and then 680 and 690. Then you also have a case study called Assessing Companies' Future Financial Health, right? You're going to read that. This is a quiz. So this is not a case study analysis. So it is individual, like most quizzes. And the questions are related to what is in the case study. So please read the case study. And obviously, if you want to know more about the ratios, watch the videos, or you can read the textbook. And then this will allow you to do, again, individual graded quiz, and you will do that. Then we have in here the Part G. As I mentioned, the Part G information, Excel file that you will need is also there. You know, the PDF is also there. And I will just kind of show you, again, as most of these Gen Inc. case study, the reason I created this is for your learning. So I provide you with a lot of notes, starting with what you're going to apply. Some learning notes on financial analysis acquisition. Read it. I think you're going to find very, very helpful. If there is a connection between what you have learned so far, and again, what are the steps you're going to take. And so, as you go through it, and then explain to you what a cost synergy means, some assumptions you can make for cost synergies in here, all the way from labor, SG&A, engineering, and so on, working capital assumptions. And some more notes, I think I'm going to find it very helpful than the assignment, but I've given you some assumptions, and you are going to, finish the Gen Inc. Part G, which is the last one you're going to do. Now, the next thing basically is I've also given you, again, in case if you did not have it, 5 questions that buyers need to ask, and I think this is where you can kind of connect and kind of learn from it as you're trying to discuss what you're learning in the Part G. Some of the learning from here, along with your research, is going to be, very, very helpful for you. And then so that, eventually, obviously, this would be the, so from there, we are done with this week, and then I'm going to give you just a quick preview what's going to happen next week, right? I will open it up sometime, end of the week, but just to kind of give you what heads up on what's going to happen in week, let's see, week 8. Let me just go there very quickly. In week 8, I'm going to ask you, for your learning or application. So there's a discussion thread, basically. Team assignment is going to be on the last HBS case study on how do you do the valuation. I've given you some notes for the formula. I've also given you the full video. If you recall, I had suggested for you to watch this whole thing initially in the beginning of the semester, and some of you did. Here you're going to watch it. I think it makes a lot more sense now that you've gone through all the cases from A through G, and kind of reflect on it. So that would be your reflection individual assignment. Of course, reflection paper, typically I do it in week 7, but I think I kind of realized that there is more learning in week 8, so I put it out there. PowerPoint that goes with the recording of Gen Inc., and I think that's going to help you to do that. So you're getting close to the semester. Again, very quickly this week, you're going to learn about ratios. It's basically a refresher on ratio. You already know about it. But you're going to learn about acquisition in this class, and and in this week in Part G. So I will wish you the great week, and we'll see you at the Zoom class.